Hello, and welcome to Donutchin Investment. This analysis is for Abaxx Technologies on the Toronto Stock Exchange as of 6th of July 2026 with a share price of $28.07. The full report is on donutchin.ca. A real licensed exchange, but pre-profit, richly valued, down 58%, and facing an unproven short seller allegation now under regulatory review. Too binary to call either way. Start with what Abaxx actually is, because it is the reason this is a hold and not a sell. It owns something genuinely hard to build, a commodity futures exchange and clearinghouse, licensed by Singapore's monetary authority, running physically settled contracts in LNG, carbon, battery metals, and now silver. That is a real, rare asset. The catch is scale. Revenue was only about $0.5 million last quarter, and the company still runs at a loss and burns cash while it tries to build genuine trading liquidity. So, a real exchange, but a very early stage one. The reason it is not a buy here is price and the tape. Even after falling 58% from its May high, the shares trade at roughly 200 times revenue, extreme for any exchange, and there are no earnings to anchor to. The stock is now sitting on its 52-week low, in a clear downtrend, with no reversal signal yet. Analysts still carry a target near $86, but those look stale, set before the crash and the short report, so we discount them heavily rather than treat them as a live view. And everything is overshadowed by one unresolved dispute. The short seller Viceroy alleges that Abaxx's reported trading volumes are largely wash trading, activity made to look like real liquidity. That is an allegation, not a finding, and it is unproven. Abaxx has categorically denied it, hired the law firm Paul Weiss, and asked Canadian regulators to review the trading. The outcome is genuinely binary. If Abaxx is cleared, the licensed platform can re-rate higher. If the claims are substantiated, the thesis breaks. Until it resolves, there is no conviction either way. Now, the other side of the ledger, an adverse regulatory finding breaks the thesis. Bear, $12. If reported volumes aren't real, the liquidity moat collapses. Pre-profit and cash burning. The $60 million raise dilutes holders. But if Abaxx is cleared, the licensed platform re-rates. So, our call on Abaxx Technologies, on the Toronto Stock Exchange, hold, under review. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donutchin Investment at donutchin.ca. The link to the full report is in the notes below. Have a great day.